Parkland has reported its third quarter profit is up from a year ago as it prepares to complete its deal to be acquired by Sunoco. Calgary-based Parkland owns Ultramar, Chevron, and Pioneer gas station chains, as well as several other brands in 26 different countries. For more on this, we're going to bring in Ernest Wong, head of research at Baskin Wealth Management. It's good to have you. Thanks for taking the time.
Thanks for having me.
So beating expectations, but do the results really matter? Are they noteworthy given this deal that's going to go through soon?
Well, I think the market liked the results, and you're seeing that reflected in the stock price of Sunoco. And given that a large chunk of this deal is going to be where the shareholders are receiving Sunoco stock, I think that's probably why you're seeing the shares of Parkland moving up as well. I think the one thing that was notable was that now we have clarity about when the deal is going to be closing. The deal will close by October 31st. By then, Parkland will no longer cease to exist as a standalone company.
Yeah, so we're getting some more details on the deal. I mean, what's the latest? You talked about when we know it's going to actually close, but what stands out to you in terms of this deal between the two?
Yeah, so I think what was really interesting about this was that in terms of looking at the shareholders who announced who elected whether they want to receive cash or shares in the deal, there was very limited interest in receiving Sunoco or Sunoco Corp units following the deal. I think this makes sense given that most of the shareholders who are owning Parkland were primarily in it for the dividend, and they have no particular interest in owning a U.S. Dividend that is going to be taxed at an unfavorable rate. And so that was one thing that was notable. I think if we look at a bigger picture overall, this is a bigger trend of consolidation in the fuel distribution and convenience store space. In Canada today, we now only have one more consolidator, being Alimentation Couche-Tard, and that is another thing as well.
Do you think Parkland's deal with Sunoco is good for Canada?
Yeah, I think it was good news for investment in Canada overall. The regulatory process for the deal was very quick. The shareholders approved the deal in June. The government regulator, the Investment Canada Act approval was announced in October. And then now we have the deal closing by the end of the month. I think initially there were some concerns that we're letting an American company come in and acquire possibly strategic assets of the Burnaby refinery and some of the gas stations that we have here. But there were commitments made by Sunoco in a way that they would maintain investment in the refinery and also maintain the headquarters and jobs in Calgary. So I think it was really good news overall that the approval process was so quick and bodes well for the future of Canada going forward.
Obviously, we're seeing a lot of trade tensions right now between the U.S. and Canada. That's the big talk of the day. Do you think that could weigh in on this deal at all?
I think a little bit, but I think what we've been very encouraged by in listening to the Prime Minister talk about overall is really encouraging investment in Canada, which is important, especially as we look to diversify markets for things like oil and gas. Over the weekend, we saw Prime Minister Mark Carney. He met with Petronas looking for investments for Phase 2 LNG Canada. So I think all of these things are beneficial to Canada, especially given the backdrop of where we are.
Right. That was going to be my next question, right? Do you think this deal that we're seeing, could that encourage more mergers and acquisitions in Canada in the future?
Yeah, I especially given the fact that most of the M&A that we've seen, especially in the commodity space, are really shuffling of portfolios between Canadian companies, one Canadian company buying another one. And so with the fact that a U.S. company is coming in and being able to purchase a Canadian company with a relatively smooth approval process, I think this bodes well for foreign investment into things like the Canadian energy sector going forward.
What about more mergers when we're talking about like gas stations, convenience stores? Are we expecting to see more mergers after this as well?
Well, I think the one thing about the Canadian convenience store and gas station sector overall is it's fairly consolidated. It's pretty rare that large portfolios are going to be taking place given the dynamics of competition that occur here. I think down south, it's still a very fragmented space. We own Alimentation Couche-Tard, partly because of their role as a consolidator of the U.S. gas station space and their opportunities to improve that as well. So I think that you'll probably see more of that in the U.S., a little bit less so in Canada.
Okay, so interesting. Ernest Wong, head of research at Baskin Wealth Management. Appreciate your time. Thanks for joining us.